Taliban would also eventually allow Osama bin Laden to set up terrorist training camps in their country. Finally, the United Nations World Health Organization (WHO) announced that the last remaining stocks of the smallpox virus would be destroyed in 3 years. This was seen as a triumph of science to rid the 26 infectious diseases world of a virus that had haunted humans for 3,500 years. The Centers for Disease Control and Prevention (CDC) in Atlanta, Georgia, and the Russian State Research Center for Virology and Biotechnology in Koltsovo, Siberia, would keep the only 2 remaining stocks. Both the WHO and the CDC would be called on that year to help decipher another disease that had a mortality rate higher than smallpox. The disease. This section contains copious information on mad cow disease. My apologies, but it's necessary so that we can understand society's reaction to the outbreak and therefore understand the financial market's reaction as well. Bovine spongiform encephalopathy (BSE) is a subgroup of puzzling diseases known as transmissible spongiform encephalopathies (TSEs). TSEs cause spongy holes to form in the brain, which destroy brain cells and neurons. This makes it impossible for messages from the brain to be communicated or transmitted to the body. The CDC website www.cdc.gov/encidad/dvrd BSE describes the disease as follows. Bovine spongiform encephalopathy (BSE) is a transmissible, neurodegenerative, fatal brain disease of cattle. The disease has a long incubation period of 4 to 5 years, but ultimately is fatal for cattle within weeks to months of its onset. BSE first came to the attention of the scientific community in November 1986 with the appearance in cattle of a newly recognized form of neurological disease in the United Kingdom, UK. Unlike the bubonic plague and the Spanish flu, every case of BSE in cattle results in death. There are several forms of TSEs in both animals and humans. Back to WHO, which describes the ZAE associated with BSE or what is called Creutzfeldt-Jakob disease (CJD). A newly recognized form of CJD, variant Creutzfeldt-Jakob disease (VCJD), was first reported in March 1996 in the United Kingdom. See WHO fact sheet number 180 on variant Creutzfeldt-Jakob disease. Why is this important? The new variation is the killer that morphed from a form that didn't cause many problems in humans to one that did. Here are the major differences, according to WHO. www.hu.int/mediacenters/factsheets/fs113/n/closing parenthesis::. In contrast to the classical forms of CJD, VCJD has affected younger patients, average age 29 years, as opposed to 65 years, has a mad cow disease. 27. Relatively longer duration of illness, median of 14 months as opposed to 4.5 months, and is strongly linked to exposure, probably through food, to BSE. Recent studies have confirmed that VCJD is distinct from sporadic and acquired CJD. From October 1996 to November 2002, 129 cases of VCJD have been reported in the UK, 6 in France, and 1 each in Canada, Ireland, Italy, and the United States of America. Insufficient information is available at present to make any precise prediction about the future number of VCJD cases. Since few countries have surveillance systems, the geographical distribution of the incidence of VCJD needs to be better defined. Similarities observed between the strain of the agent responsible for VCJD and those of BSE and closely related agents transmitted naturally and experimentally to different animal species are consistent with the hypothesis discussed during 2 1996 WHO consultations, that the cluster of VCJD cases is due to the same agent that caused BSE in cattle. Note the language here. Cluster cases. This year when we are trying to gauge whether a disease has changed from a relatively unusual and not rapidly reoccurring one, CJD, to one that is reproducing quickly due to exposure, VCJD. Note that WHO says that the connection between BSE in cattle and VCJD in humans is still a hypothesis and not officially proven. This underscores how much uncertainty still remains with mad cow disease today. Try to imagine what was going on in the United Kingdom during the initial discovery of BSE and the outbreak of VCJD in humans. Like BSE, VCJD is invariably fatal, there is no cure. If you catch it, you die. This is why there was so much concern and panic in the United Kingdom and why the reactions were so strong from the UK trading partners. Let's turn to the Centers for Disease Control and Prevention (CDC) in the United States for just a bit more information and commentary. www.cdc.gov/ncdad/dvrd/beast/closing parenthesis colon. BSE, bovine spongiform encephalopathy, is a progressive neurological disorder of cattle that results from infection by an unconventional transmissible agent termed a prion. The nature of the transmissible agent is not well understood. Currently, the most accepted theory is that the agent is a modified form of a normal cell surface component known as prion protein. The pathogenic form of the protein is both less soluble and more resistant to enzyme degradation than the normal form. Research indicates that the first probable infections of BSE in cows occurred during the 1970s, with 2 cases of BSE being identified. 28. Infectious diseases. In 1986, BSE possibly originated as a result of the feeding of scrappy containing sheep meat and bone meal to cattle. There is strong evidence and general agreement that the outbreak was amplified and spread throughout the UK cattle industry by feeding rendered bovine meat and bone meal to young calves. The BSE epidemic in the United Kingdom peaked in January 1993 at almost 1,000 new cases per week. Through the end of April 2005, more than 184,000 cases of BSE had been confirmed in the United Kingdom alone in more than 35,000 herds. There has since emerged strong epidemiologic and laboratory evidence for a causal association between variant CJD in humans and the BSE outbreak in cattle. The interval between the most likely period for the initial extended exposure of the population to potentially BSE-contaminated food 1984-1986 and the onset of initial variant CJD cases 1994-1996 is consistent with known incubation periods for the human forms of the disease. Here are the key points to think about as we attempt to understand the market's reactions to the outbreak. 1. The uncertainty regarding the linkages between BSE and BCJD. 2. The feeding of rendered cows' bovine meat and bone meal to young calves, and 3. The penetration of the disease throughout the UK herds. Think about these as they pertain to market reaction against producers and suppliers of protein products. The food chain link means that all the companies associated with that particular path will potentially be negatively impacted. Outbreak in the United Kingdom. As the CDC points out, 2 cases of BSE in cattle were found in the United Kingdom in 1986. At the time, UK authorities didn't believe it posed a risk to humans. After all, scrappy, another zay found in sheep, had been around for centuries but had never made the jump to humans, even after infected meat was consumed. Part of the problem for the British authorities with BCJD was the long incubation period from infection to showing symptoms. Scrappy showed up quickly and killed quickly, while BCJD did not. This is why in a 1989 BBC television interview, the Chief Veterinary Officer of the British Ministry of Agriculture, Fisheries, and Food, Keith Meldrum, said, "The evidence on BSE is derived mainly from scrappy, and there is no evidence, scientific or otherwise, that scrappy does transmit from sheep or goats to man. Using this model, we are fairly confident that BSE does not transmit to man." Mad cow disease. 29. This view would change dramatically when an unusual group began to come down with what appeared to be common CJD, teenagers and young adults. Prior to the 1986 discovery and diagnosis of BSE, there had been only 4 known cases of CJD in teenagers in the world, and these were spread out over decades. Between 1990 and 1995, there were 4 in the United Kingdom alone. In total, there were 10 cases of BSE in teenagers and young adults in the UK. The brains of the infected humans and the brains of the infected cows displayed the same pattern, spongy holes that had a flower-like pattern and had protein deposits or plaques surrounding the holes. On March 25, 1996, Harry Dorail, the UK Secretary of State for Health, announced that BSE or mad cow disease had spread to humans. More important, the cause was most probably the consumption of infected beef. History ain't what it used to be. My biggest issue with most writing on the financial markets is the lack of context for a reader. Poor journalism tells you a particular stock market rose 2% or an economic indicator fell 5% without explaining what the market was expecting or the recent history of those numbers. The reader can't discern whether the announced number has any meaning for the market or whether the market was reacting in a way that was consistent with the expectations. If you are going to understand how to make money from an event, you had better understand what was going on in the world when the event was occurring. Otherwise, you are just guessing as to what will happen next. The purpose of this book is to get the reader to make better decisions on what is possible and what are the permutations of the events. The United Kingdom had political turmoil just prior to the outbreak of VCJD. The government of Prime Minister John Major was in a precarious position and its grip on power in the House of Commons was down to just 2 legislators. Should a vote of no confidence arise over an issue, it would be almost a coin flip as to whether the government would lose and be forced into an immediate general election that the opposition Labour Party was sure to win. Major's party had just barely avoided this situation over Sir Richard Scott's report on arms to Iraq in the 1980s. This tenuous grip on power could be one of the explanations as to why it took the government so long to publicly announce the outbreak, which eventually contributed to the panic that ensued. On March 8, the Bank of England (BoE) had just cut interest rates 25 basis points. A basis point is a quarter of a percentage point for the 30 infectious diseases. Figure 3.1 UK base rates. Source: used with permission from Bloomberg LP. Second time in 1996, down to 6.00%. Figure 3.1. It was the third rate cut of this kind in 4 months. The FTSE 100 had rallied. Figure 3.2, and the 10-year UK gilt bond market did as well. Figure 3.3, but only briefly before the markets reacted negatively to a very strong US unemployment report. Unfortunately, later in the day, the US Labor Department reported that the U.S. economy had added a whopping 435,000 jobs in February. Figure 3.4, double what the markets had been anticipating. Worldwide, the markets were judging that this strong number would mean that Alan Greenspan and the Federal Open Market Committee (FOMC) would not cut rates in the United States on March 26. The FOMC had cut rates by 25 basis points in January, from 5.50% to 5.25%. Figure 3.5. The anticipated pause in rate cutting by the Federal Reserve would cause all the equity markets around the world to drop, including the FTSE 100. The yield on the 10-year gilt jumped 40 basis points, and the British pound dropped below the lows of the previous month. Figure 3.6. In the days leading up to the announcement of the outbreak, the UK equity, gilt, and currency markets had all stabilized and were attempting to regain the ground they had lost. The interesting aspect of the timing of the outbreak is the sequence by which the markets learned of the connection to humans. Most books and mad cow disease cite the March 25 announcement in the House of Commons b. Mad cow disease. 31. Figure 3.2 UK FTSE 100 index. Source: used with permission from Bloomberg LP. Figure 3.3 UK 10-year gilt yield. Source: used with permission from Bloomberg LP. 32. Infectious diseases. Figure 3.4 US non-farm payroll. Source: used with permission from Bloomberg LP. Figure 3.5 US federal funds target rate. Source: used with permission from Bloomberg LP. Mad cow disease. 33. Figure 3.6 British pound. Source: used with permission from Bloomberg LP. Harry Dorail, the UK Secretary of State for Health, as the day when the information became available. However, on March 21, Germany called for a European Union-wide ban of UK beef following the revelation of a possible link between BSE and VCJD. Scientists announced that they thought the victims might have eaten infected beef during the first phase of the BSE outbreak between 1986 and 1989. France had already banned British beef. Essentially, this gap between the information being released and the official presentation to the House of Commons provided an amazing opportunity for taking risk for those aggressive enough to do it. Without question, it would have been difficult to see all the permutations that would spill out from the disease. However, there were some clear connections. First, the demand for UK beef was going to drop dramatically. At one point during the initial stages of the outbreak, the price of beef dropped 50%. Any producers of meat and meat products were going to lose sales and profits. Initially, it was unclear as to the extent of what was needed to betonet the herds of the disease. Also, scientists were unsure whether VCJD could be passed through milk or milk products. This is why stock prices of UK dairy companies such as Northern Foods plc, Figure 3.7, and Unigate plc, now Unig plc, dropped quickly on March 25. The point is that you could have sold the shares on Thursday, March 21, or Friday, March 22, and made money. 34. Infectious diseases. Figure 3.7 Northern Foods plc equity price. Source: used with permission from Bloomberg LP. Companies that sold the beef products in their restaurants were impacted as well. McDonald's Figure 3.8 and other fast food restaurants selling hamburger and beef products saw their shares drop as uncertainty over how far the disease had spread sparked concerns. It's not surprising to think that this would occur, with images of burning cows in the United Kingdom that would make anyone around the world a bit nervous about consuming a cheeseburger whose meat was of unknown origin. The odd twist to the food producer story is that shares of companies that produced chicken initially soared as the markets anticipated a pickup in demand for poultry as consumers shifted away from beef. However, the positive move in share prices for poultry producers would last only a couple of days as the market began to factor in the chance that this food product was connected to mad cow disease, too. Many of the UK food producers would see their stock prices hit lows at the end of March through mid-April before recovering. The same reasoning applies toward the currency. On March 21, you could have had the information on UK beef and could have acted to sell the British pound. Also, you could have waited and sold on March 24 as well and still would have seen the currency go lower. On March 26, the U.S. Federal Open Market Committee (FOMC) left interest rates unchanged as expected. Mad cow disease. 35. Figure 3.8 McDonald's Corporation equity price source, used with permission from Bloomberg LP. However, the Doral speech coupled with a potential widening of interest rate differentials between the United Kingdom and the United States caused the British pound to lose ground until the beginning of May, when it hit bottom for the year. The 10-year UK gilt market was impacted, but to a lesser extent. Let's run through the countervailing winds that blew so that the outbreak didn't have the same impact. The initial reaction was that this was something that overall was bad for the country and bad for the economy. You would be buying the 10-year bonds thinking that lower growth would mean lower interest rates and higher bond prices. However, the question of how many cows to slaughter arose when on March 25, UK Agriculture Minister Douglas Hogg said the government was considering slaughtering 4.5 million cows. Hogg ordering cows to be killed sounds like something from George Orwell's Animal Farm, but this was no allegory. The markets quickly thought that the UK producers and farmers would have to be compensated for their losses. Estimates ran between 400 million and 700 million British pounds for reimbursement of lost animals. Then, there was the concern that inflation would jump on foodstuffs as milk and beef would have to be imported until the domestic herds were rebuilt. On March 28, the 10-year gilt yield shot up above 8.20% on these fears. The yields then fluctuated in a range. 36. Infectious diseases. Between about 7.90% and 8.25% for 3 months. This is one more bizarre twist to the story. The event would cause UK meat and meat products to be shunned, thus causing a drop-off in economic activity, a net negative to the economy. Yet bond yields went up over the fear of high government payments and an increased inflation threat. It's always these add-on effects that few traders think of with world event trading that cause them to enter into losing trades. Theory Severaki concepts to remember for future disease outbreak situations. 1. Information is imperfect and not distributed evenly. This generates opportunities to take risk if you do your homework and follow the news. 2. Focus on the narrow group that is impacted the most to see the bigger moves. The mindset should be to think negatively toward what the outcomes will be and be prepared to sell the instruments that will be impacted. The converse should apply as well with industries that will see increased demand benefit, think chicken or fish in this case, and therefore these companies should be bought. A textbook hedging situation occurs where we can buy shares of a food producer that is not involved in beef and sell a food producer that mainly produces beef. 3. The broader instruments will be impacted, but to a lesser extent. As an example, an international portfolio manager might dump a UK dairy stock and then he probably needs to dump the currency as well at some point. He may just not dump all of the currency he holds and may choose to invest in another area of the country. Remember, these broader instruments, currency and bond markets, are subject to other forces that can outweigh a localized event. However, a good rule of thumb is that the smaller the country, the more likely the event will have a larger impact on its specific markets, including the broader instruments. Rates equals rewards. I would be failing theater in my questo privity context if I didn't discuss some broader perspective on this outbreak. The trades I've described are quite short-term in nature and must be viewed as aggressive investors can take advantage of these if they act quickly and are willing to take on risk. However, this is not the only way to play the game. The medium-term investor can also take advantage of the situation by looking at the event and evaluating whether this is a significant change to the underlying fundamentals of the investment climate or it's a short-term blip. Granted, this is difficult to judge, as one will be pressed to evaluate the incident and what the wider implications will be. As the saying goes, though, there is no reward without risk. This is one of the reasons I'm writing this book for investors, to give you the tools. Mad cow disease. 37. To evaluate and make better informed decisions. For the medium-term investor, you need to look at the variables that impact the financial markets for longer periods of time, such as interest rate policy, government fiscal and tax policy, and commodity trends. Reviewing all of these factors is not my intention for this book, but let's review one key sledgehammer for any economy: interest rates. In 1996, the Bank of England was in the process of cutting interest rates. The BOE cut rates by 25 basis points in January and in March. Simply put, lower interest rates decrease the cost of capital for companies and individuals and therefore stimulate economic growth. By extension, this should stimulate profits for businesses and consequently it should generate a rise in their stock prices. This is why equity prices can rise even in the middle of a recession when the central bank begins to cut interest rates. The reverse is true as well. The simple rule of equity investing is to buy when they cut, and pare back or sell when they hike. Returning to the United Kingdom in March 1996, we see that the BOE cut rates at the very beginning of the month and duck equities rallied. Some of the move occurred prior to the cut as the market was already anticipating the positive event. Then, after a very strong U.S. employment number, equities in the United Kingdom and the rest of the world fell in March as the markets rightly predicted that the U.S. Federal Reserve would not be cutting rates. UK equities sank initially and then began to rally, with only a minor drop due to the mad cow outbreak and the banning of British beef exports. Using our simple rule of equity investing, we would have been holding on to our UK investments. As a matter of fact, we should have been buying the sell-off in the food producers that occurred, as almost all ended the year higher than the lows that were reached in March due to the mad cow's care. The BOE rewarded equity investors by cutting rates in June by 25 basis points. The interest rate cuts all contributed to an equity rally that moved the FTSE 100 index from a low in March around 3,650 to a high in October of 4,050. For the medium-term investor, an 11% return in 7 months is a justified reward for the risk of buying during a major negative event. Let's see if this pattern persists during the outbreaks in Canada and the United States. 2003 outbreak in Canada. Heading into 2003, the Canadian economy had been outgrowing those of the rest of the G7, 7 largest industrial countries. Unlike in the United Kingdom and the United States, in Canada the central bank was in the process of raising interest rates. The Bank of Canada raised interest rates. 38. Infectious diseases. Figure 3.9 Bank of Canada overnight lending rate source, used with permission from Bloomberg LP. 25 basis points in March, from 2.75% to 3.00% and then again in April from 3.00% to 3.25%. Figure 3.9. Canadian equities put in their lows for the year in March. Figure 3.10, as the market digested the rate hike in that month, the strong possibility of a rate hike in April, and a hit to tourism in Toronto from an outbreak of severe acute respiratory syndrome (SARS). The 10-year bond yield rose from 4.80% in March to a peak of 5.21% at the beginning of April. Figure 3.11. The higher interest rates and strong growth helped propel the Canadian dollar against the US dollar from a low in January of 1.5700.6370 C to a high in May of 1.3500.7407 C. Figure 3.12. On May 20, Canada reported North America's first case of BSE in a decade. Canadian Agriculture Minister Lyle Van Cleef confirmed the infection in an Alberta cow that was slaughtered on January 31 but that didn't enter into the human or livestock food chains. Canada's economy is heavily dependent upon exports, as it comprise around 1/3 of the gross domestic product (GDP). The United States is Canada's largest market, with 85% of all exports ending up in their neighbor to the south. It was devastating to the $26 billion Canadian beef industry to have the United States suspend cattle and beef imports from their country due to the BSEF ending. Japan and 32 other nations quickly followed suit and banned the Canadian beef. Mad cow disease. 39. Figure 3.10 S&P Toronto Stock Exchange Composite Index Source, used with permission from Bloomberg LP. Figure 3.11 Canadian 10-year bond yield source, used with permission from Bloomberg LP. 40. Infectious diseases. Figure 3.12 Canadian dollar. Source, used with permission from Bloomberg LP. The industry was worried that the Canadian authorities would require the destruction of millions of cattle just like the UK authorities did in 1996. Canada had previously had one other case of mad cow disease in 1993, and the entire herd was destroyed as a precaution. By this time, VCJD from diseased meat had killed 125 people in the United Kingdom and at least 80 others around the world. There was also some fear at this time that Canada was holding back information on the outbreak due to the delay between when the cow died in January and when the outbreak was announced in May. After the announcement on May 20, 2003, the financial markets showed their ability to panic first and ask questions later. Live cattle futures dropped 1.5 cents to 72.4 cents, which was the largest drop in 4 months. Traders bought hogs and sold cattle on a spread trade. Stock prices of companies that produced beef, distributed the beef, and sold the beef in their restaurants dropped dramatically. McDonald's fell 6.7%, Wendy's fell 6.6%, and Tyson Foods fell 4.9%. The timing couldn't have been worse for the beef producers, as it was just before the prime U.S. barbecue season, with Memorial Day and the start of summer just around the corner. Hamburger. No, I'll have the chicken, thanks. Mad cow disease. 41. Figure 3.13 Bio-Rad Laboratories Equity Price Source, used with permission from Bloomberg LP. In contrast, companies that produced tests for mad cow disease, like Bio-Rad Laboratories, saw their stock prices rise. Figure 3.13. In anticipation of an economic slowdown, the Canadian 10-year bond rallied and saw its yield dip from 4.60% to below 4.40% by the end of May. Amid simultaneous fears of mad cow disease and occurrence of SARS, its yield would eventually go as low as 4.00% by mid-June. Just like with the Spanish flu, we have more than one component impacting the markets. But the direction on the market is impacted in the same way. The Canadian dollar would weaken from 1.3500.7407 C to 1.3950.7168 C from May 20 to May 30. However, the Toronto Stock Exchange 100 would see only a slight drop that would last no more than a couple of days. The fascinating development is that the pattern from the UK outbreak repeated itself in Canada. There was initial tremendous uncertainty, lack of detailed information, and sharp reaction in the financial markets. As an example, U.S. Pet Pantry recalled dog food that might have been tainted with mad cow disease, although there was no scientific evidence that dogs could contract or transmit any form of the disease. Ultimately, the moves in the financial markets would be unwound as the larger influence of interest rates again would provide the stimulus for recovery. This time it would be cuts in rates from outside the country that would provide the bounce. 42. Infectious diseases. Figure 3.14 U.S. Federal Funds Target Rate Source, used with permission from Bloomberg LP. The FOMC was in the process of taking short-term interest rates to their lowest level since the 1950s. Figure 3.14. The FOMC cut rates to 1.00% in June 2003 and would eventually keep them there a year. Also, Japan was taking extraordinary measures to inject its moribund economy with liquidity as well. This monetary stimulus was exceptionally supportive for equity markets and bond markets around the world. There were serious concerns that a worldwide recession would ensue and that central banks needed to be aggressive in cutting interest rates. As an example of this extreme monetary stimulus, Ben Bernanke this time earned his Helicopter Ben nickname when in a speech he said that if it was necessary the Federal Reserve could drop money from a helicopter. He would eventually go on to be the next chairman of the Federal Reserve. After the FOMC cut in June, the Bank of Canada would follow in July and again in September, dropping overnight rates from 3.25% to 2.75%. The TSE would gain over 20% from the date of the announcement of BSE in Canada. The Canadian dollar would gain 7%. McDonald's would see a gain of over 55% before the announcement of an occurrence of BSE in the United States. And here's the really fun fact: live cattle would recover as well. This is a bit more complicated due to the fact that the market's initial reactions were to sell cattle as they perceived their Mad cow disease. 43. Would be a drop in demand not only for Canadian beef, but also for beef from anywhere in the world. Cattle prices recovered when the markets began to price in the prospect of massive herd destructions and the taking off the market of Canadian beef exports to the United States. This situation pushed cattle prices from a low in July near 75 cents to a high in September near 107 cents, a move of over